Market regulator SEBI has passed an interim order with respect to alleged manipulation in the closing auction session. As part of the order, the SEBI has barred two entities, Copthall Mauritius, which is a foreign entity, and Mansi Share and Broker, which is a domestic entity, from participating in the securities market. The regulator says that Copthall placed aggressive buy orders to push Sensex during the CAS session, especially on the expiry day, while Copthall accounted for nearly 99% of the total buy orders value during the first Sensex spike. The regulator found that on August 13, there were three Sensex spikes that happened that eventually led to Sensex rising against the normal market direction. It also said that a domestic entity, Mansi Share and Broker, had placed aggressive sell orders in 8 Sensex scripts to push index lower, and thereafter it withdrew or cancelled all the orders, thereby leading to a spike coming into the Sensex there. The regulator says that both the entities have made an unlawful gain of over 3.7 crores, of which Copthall made an unlawful gain of 2.96 crores, while Mansi Share Brokers made an unlawful gain of nearly 71.65 crores there. Both the order has come into immediate effect, and both the entities have been barred from participating either in the CAS or the securities market. Now, this raises a very important question which everyone is talking about in the market, especially with respect to the kind of liquidity which is there in CAS. The Indian market has a lot of liquidity which comes in from prop trading and retail investors, and the absence of these two big classes of investors in the CAS session, especially the closing auction session, basically puts the entire question mark on the efficacy of CAS going forward. There has been already data which has come in that roughly around 900 to 1000 crores on an average is the kind of turnover which happens in the last 15 minutes, which is the closing auction session on the NSE. On the BSE, it's even more lower, and lower volume and turnover basically means that there is high probability of manipulation, because a small order size can easily push up the prices of stocks, as a result of which the index can go in either in the upper direction or in the lower direction, depending upon the kind of orders which have come in. So it's now SEBI may have to look at review the entire closing auction session framework, so as to bring in more liquidity if it wants CAS to go forward.